Disclaimer. All contents, ideas, opinions and information shared or implied herein are for informational and educational purposes only. Hello everybody. Welcome to Sunny the Eggman YouTube channel. In this video, we will be revealing on the fundamental analysis for Sabana Reit, its strategic review and future prospects. Before starting, please help to share and subscribe this channel as your support is our biggest motivation to continue on producing quality contents. Sabana Reit, SGX trading code M1GU, was listed in SGX in 2010. It is one of the largest listed Shari-ah-compliant industrial REIT in the world with asset size of approximately 900 million Singapore dollars. Its property manager, Sabana Property Management Private Limited, is wholly owned by Sabana Investment Partners Private Limited, indirectly through the manager. Sabana Reit has 18 industrial properties in Singapore, situated close to the expressways and public transportation. Its portfolio are classified into four main categories, which are high-tech industrial, chemical warehouse and logistics, and general industrial. As at the 31st of December 2020, the portfolio occupancy rate for Sabana Reit is at 76.5%, with highest net lettable area under high-tech industrial, followed by warehouse and logistics. Its market capitalization is approximately 479.1 million Singapore dollars currently. Firstly, we will be looking at Sabana Reit's latest audited financial statements for fundamental analysis. In the past 4 years, the revenue for Sabana Reit is experiencing constant drop, from 85.2 million Singapore dollars in 2017 to 71.7 million Singapore dollars in 2020. This translates to an average decrease in revenue by 5% per year since 2017. Similarly, the distributable income to unit holders is also in decreasing trend over the past 4 years, by 17% from 35 million Singapore dollars in 2017 to 29 million Singapore dollars in 2020. The less satisfactory financial results is mainly due to lower revenue from 10 Changi South Street 2 due to termination of a master lease and 3A Joo Koon Circle master lease expiry in second half of 2019. Also, the drop in distributable income in 2020 is partially impacted by recognition of allowance for impairment losses on trade receivables amounted to approximately 2 million Singapore dollars. In terms of net debt to equity, it was increased by 12%, from 0.58 in 2018 to 0.65 in 2020. If this ratio keep increasing, it may impose higher risk to investor, as in the event of liquidation, investor or equity holders are last in line to get back their money as the company needs to repay creditors include borrowers. Sabana Reit NAV is also decreasing from 57 Singapore cents as of the 31st of December 2019 to 51 Singapore cents as of the 31st of December 2020. Decrease in total asset is mainly due to net revaluation loss of the properties, partially offset by capital expenditure on the properties, which includes ongoing asset enhancement initiative at New Tech Park. Now we will be revealing on the technical analysis on this REIT stock. The stock price is trading at 45 Singapore cents as of the 30th of August 2021, increased by approximately 22% as compared to 1 year ago. It is trading below its NAV of 51 Singapore cents as at the 31st of December 2020. Current stock price for Sabana Reit is almost similar to stock price in 5 years ago, which is 46 Singapore cents in September 2016. In March 2020, the stock price dropped to its 5 years low at 0.235 Singapore dollars. This is partly due to release of FY 2019 financial statements and negative impact from COVID-19 pandemic. In terms of distribution per unit, it is showing a continued downward sign decrease from 5 cents in 2016 to 2.76 cents in 2020. Until now, you must be wondering if Sabana Reit worth investing and how is their future prospects. To begin with, ESR Reit and Sabana Reit announced a proposed merger by way of a trust scheme of arrangement in July 2020. A consideration of 0.377 Singapore dollars, which means 26% discount to Sabana Reit NAV was offered. However, The merger was not successful as Sabana Reit unitholders deemed the valuation as inadequate. Subsequently, the REIT announced their plan to continue divesting non-performing assets and rejuvenating selected properties, to be back on track with refreshed strategy. In 2020, they managed to secure 68 new and renewed leases totaling more than 1.3 million square feet, equivalent to more than one-third of their portfolio net lettable area at 40.1%. Also, the tenant retention rate for all properties was strong at 73.6% in 2020, as compared to 50.7% in 2019. To add on, the Asset Enhancement Initiative at the REIT flagship New Tech Park has progressed well at occupancy rate of 96.7%. The mall is opened now during Q2 2021. Regardless some of the initiatives done by Sabana Reit, there are still some risks to be considered before investing. Firstly, top 10 tenants of this REIT accounted 45.8% of gross rental income. It imposes diversification risk to Sabana Reit and they would need to closely monitor the recovery of the tenants from COVID-19 pandemic. Next, the projected new supply of private factory space is 6.7 million square feet in 2021, due to COVID-19 related delays to projects which supposed to complete in 2020. Hence, there might be oversupply from 2021 to 2024, which potentially impact the rent growth. Lastly, the risk in undertaking this REIT is not equivalent to its returns. The annualized return for this REIT based on historical data is only approximately 5% for investment more than 5 years, mainly due to return from distribution received. In conclusion, it is not advisable to invest this REIT for now unless they are able to show improved financial results and finite future plans. Hope you can have some valuable insights on Sabana Reit after watching this video. Do comment and share with us your thoughts on the above points. Stay tuned and remember to share, like and subscribe our channel. I'm Sunny the Eggman. Goodbye.